Joining us now, Colin Sundelson. He's a sales manager at Investec Asset Management. He's joining us for some more investment insights. And the word out there is that you are firmly of the opinion right now that cash is king. Would that be fair?
As we were saying earlier, I think, Bronwyn, it's really a function of risk appetite. For private and corporate investors, over and above the issue of risk, there's certainly some large corporates that have investment mandates to invest in cash only. So to the extent that they need to invest in a very conservative asset class, there's an opportunity to invest in either direct bank deposits or in money market funds, which give you exposure to money market instruments generally. So from that point of view, depending on your risk for appetite and what your investment mandate includes, I think there's certainly a place for cash in an investment portfolio.
And I think, going further, it's also about your time horizon. So if you're a long-term investor, and history has proven it, that equities are your preferred asset class, depends on which point of view you're coming from. Last year, fixed income was the best returning asset class on the market. But from your point of view, are you seeing further demand for deposits? Are you guys chasing deposits?
Yes, we really deal in the corporate cash space, with a focus on managing a lot of listed corporate and private company money. And as I said, where these companies have operational cash on balance sheet, that they're looking for good yields. There's certainly a place for money market funds.
Do you believe that corporates are holding back more money at the moment?
They are.
In light of the uncertainty?
Yeah, I think with what's going on in Europe, and Europe being our biggest trading partner, a lot of corporate South Africa aren't seeing the requisite demand coming through from Europe. And for that reason, they're not prepared to invest in capital expenditure or growth initiatives generally. And we're seeing billions of rands being hoarded on South African balance sheets for that reason. So I think an opportunity for those corporates to look at different opportunities in the cash space to generate yield uplift while the money remains in
What are
cash.
the big opportunities in that space to generate yield uplift?
I think in the money market space, there's certainly an opportunity to invest instead of directly with one counterparty by way of a bank. There's an opportunity to invest in money market funds. Typically these investors are considering three key criteria when placing their cash: risk on the one hand, return secondly, and thirdly, what kind of access to their cash or liquidity do they have. So when considering those three, as I said, there's an opportunity to generate good yield uplift through money market funds, diversify your risk by dealing with more than just one counterparty, and then having access to your cash overnight.
Yeah, Colin, I totally agree that cash has its space. Are you finding from your private investors a concern that your after-tax return is roughly 3-4% if you're lucky?
Sure.
Is that a concern from them?
Sure it is, and I think to that extent there are opportunities for people to look into what we call an enhanced cash space. So to the extent that these corporates have mandates to invest in money market instruments only, but they may have an appetite to take on slightly longer duration risk in the same asset class, there's certainly an opportunity to generate real returns in the fixed income space, while at the same time not taking on significantly more risk at all. Typically we look at risk in terms of standard deviation, where 0 is a no risk type investment and 20% type standard deviation is a typical general equity fund.
The volatility in the rand, does that have an impact on people's corporates' decisions to hold cash and the amount of cash that they're exposed to?
The money market investments that I'm referring to are locally based, so all the underlying instruments are invested in local currency. We don't take currency risk at all, so no, that doesn't impact us. When you compare the cash returns that you're seeing being generated out of Europe, close to 0, we actually heard in the last quarter of last year, the German government issued a government bond at close to 0% yield, and it was fully subscribed to. So that
Well,
just gives
you know, it's that adage.
Yeah.
Everybody's searching for yield.
Yes.
South Africa offers that yield, and we're going to
Yeah.
continue offering that yield going forward.
Yeah, I think that's absolutely correct. But you know, from a foreign investor's perspective, I don't think they want to go into cash deposits. You can get better on bonds. They'll take the risk, you know, of South Africa is fairly safe, but we don't see that flowing into cash deposits either. So.
I think that's where the opportunity is for investors to rely on professional fund managers
Yeah.
who've been managing billions of rands in money market funds for a long time to get the mix right between investments directly in banks and a combination of other money market instruments to generate some yield uplift. Corporate bonds or corporate credit is one way that these fund managers are doing that. So where you're getting 5.5% in cash, you're getting yields from corporate bonds around 8%, and on a lot of money that can be a significant uplift in your return.
Suraj, just in terms of fund managers out
Yeah.
there at the moment, what level of cash are people holding on to?
Yeah,
Or
look,
do you think it's pretty much deployed?
Look, I think, you know, if you look at a typical Prudential type fund, balanced fund, I think I'll be surprised if fund managers have more than 10 to 15% in cash, looking for opportunities to, you know, looking for that sense of comfort in markets to get back into markets. So I think from our perspective and our view is that we think that we'll have good equity markets this year, beating cash, beating fixed income. So we will obviously look to invest some of that cash back into the markets. Colin, just one last question from me. You know, the dividend income type investments, the closure of that type investments, are you seeing a flow from that into money market type funds?
We certainly are. I mean, I think there's the appetite that these investors typically have is highly conservative, and the alternatives are limited. So to the extent that they have an option to invest in a low risk money market fund, while they still need to pay income tax on that yield, there's certainly a lot of interest, a lot of demand flowing back into money market funds.
Colin, thanks so much for your time. Colin Sundelson joining us from Investec Asset Management.